Overnight, Donald Trump reinstated a blockade on Iranian shipping through the Strait of Hormuz. Oil spiked. Wall Street sold off. And your portfolio just walked into one of the loudest weeks of the year. Here's exactly what happened overnight, and what it means for you before the ASX opens this morning. Let's start with the scorecard. The S&P 500 fell 0.79%, closing at 7,515. That's its worst day in more than a week. The Nasdaq took the bigger hit, down 1.55%, dragged lower by a chip stock sell-off we'll get to in a moment. The Dow held up better, slipping just 0.26%, cushioned by strength in energy names. The VIX, Wall Street's fear gauge, jumped around 8% overnight. That sounds dramatic, but at a level near 16, this is elevated caution, not panic. The 10-year Treasury yield ticked up slightly to 4.585%. Gold actually fell 1.22%, even with all this geopolitical noise, because rising real yields are currently winning the tug-of-war against gold's safe haven appeal. And oil was the story of the night, surging as much as 8% at one point before settling around 4 to 5% higher. So what actually drove this? There are three things you need to understand. First, and by far the biggest, is the Strait of Hormuz. President Trump announced overnight that the United States is reinstating what is calling a blockade on Iranian shipping through the strait, and attaching a 20% fee on cargo passing through under U.S. protection. Iran responded almost immediately by broadening its strikes to other Gulf nations, including Qatar and the UAE. Here's why this matters so much. The Strait of Hormuz carries roughly 1/5 of the entire world's seaborne oil. Any credible threat to that corridor sends crude prices higher within hours, and that's exactly what happened. This isn't a rumor or a headline scare. It's a real supply risk, and markets are pricing it as one. Second, the chip trade hit a wall. SK Hynix, which only debuted on US exchanges last week to a huge reception, tumbled around 8 to 9% after a brokerage report questioned whether the company can hit its own profit targets this quarter. That dragged the broader semiconductor sector down with it, and it's the main reason the Nasdaq underperformed the S&P and the Dow so sharply today. Third, and this is the one to watch going forward, traders are positioning ahead of a genuinely enormous week. Bank earnings season opens tomorrow with JP Morgan and Goldman Sachs reporting before the bell. June inflation data lands the same day, and Fed Chair Kevin Warsh testifies right alongside it. A lot of today's caution is simply de-risking ahead of that, rather than a reaction to the Iran headline alone. Now let's look at how this played out across sectors, because the pattern here tells its own story. Energy was the standout winner, with the sector jumping around 3% as oil spiked. Consumer defensive stocks also caught a bid, up around 1%, as money rotated towards safety. On the losing side, healthcare slipped about 1%, and the semiconductor-heavy tech sector bore the brunt of the SK Hynix fallout. Here's the read. This wasn't a broad panic where everything gets sold. It was a classic rotation, out of high multiple growth names and into energy and defensives. That's a meaningfully different signal than a full risk-off capitulation. Now, the part you're really here for. What does all of this mean for the ASX this morning? First, the open. Expect the ASX 200 to open somewhere between flat and down 0.4%. Wall Street was soft but orderly overnight, and Asian markets actually held up reasonably well, with Japan and Korea both higher. This is not a gap-down setup. Second, the sector spotlight. Energy is your standout again this morning. With oil surging on the Hormuz blockade, names like Woodside, Santos, and Beach Energy should see genuine buying interest at the open. On the other side, tech names like WiseTech, Zero, and Seek are exposed to sentiment spillover from the Nasdaq's rough night. And gold miners like Newmont, Evolution, and Northern Star face a slightly awkward setup, because gold actually fell overnight even as geopolitical risk rose. Third, the commodity red. Iron ore didn't see a major overnight catalyst, so BHP, Rio, and Fortescue should mostly track the broader market tone today. Gold's drop is a mild headwind for the miners we just mentioned. And oil's sharp move is your clearest tailwind, benefiting Woodside, Santos, and Beach Energy directly, while adding a cost headwind for fuel-sensitive names like Qantas. Fourth, the Aussie dollar. The US dollar firmed modestly overnight as yields tick higher, and that points to a slightly weaker Australian dollar this morning. That's a tailwind for our exporters and miners, and a mild headwind for importers and retailers like JB Hi-Fi and Harvey Norman. And finally, one stock to watch today. Woodside Energy is the cleanest read-through from overnight. Just keep in mind that oil was volatile intraday, spiking well beyond where it settled, so today's follow-through depends heavily on whether this blockade actually holds over the next 24 hours. So here's what to actually watch during the session today. First, keep an eye on whether Woodside and the other energy names hold their early gains, or fade as the session goes on. A fade would tell you the market thinks this blockade gets walked back quickly. Second, watch how ASX tech names react to the opening bell. If they shrug off the Nasdaq's weakness, that's a bullish signal that local investors see this as a US-specific chip story rather than a broader tech problem. And third, keep half an eye on any fresh headlines out of the Middle East during our session. Given how fast this story is moving, a single social media post from Washington or Tehran could shift the entire commodity complex again before lunch. If this saved you time before the market opened this morning, do me a favor and hit subscribe, and turn on the notification bell so you catch tomorrow's episode before the ASX opens too. I'd love to know what you're watching today, so drop it in the comments. I read every single one. See you tomorrow morning.